Good morning. Today is February the 14th, 2024, and we were dealing with an extremely fast market. And we normally trade, let's say, an 8-1 Renko and higher time frame, maybe a 12-2, 12-3. And it was so incredibly fast and totally impossible to trade. So we encourage people not to trade, and it became where you'd win one, you'd lose one. It didn't make sense to trade it, so we switched to a 22-2, and it took us a while to figure out this is not going to slow down, and it didn't. Even at 11, it was still running, and you'd get 7 or 8 bars with the same timestamp, sometimes 15, and I mean it was just insane, and which is not feasible to trade it. So we went to a 22-2, and obviously it made the trends more defined, where it was difficult or impossible to trade the smaller bar size. But we have big stops and big targets. So we traded one NQ contract, and we like to go for $200 per day. Why do we do that? Because we have people, and a lot of them, with funded accounts. And if they can make 100 and they got 5 funded accounts and they're consistently profitable, don't take big risk and go flat when they hit their target, you got $600, and that's a very good amount of profit. That's $3,000 a week, right? 5 times the number of contracts. I mean, it's 3,000 if you got 6 contracts. Sorry. And so what that means is you got 52 weeks. You just do the math, and there's just a huge amount of potential there. And I do the math, but I don't like to talk profits because it can get you in trouble. But that's a lot of money. And we didn't trade this morning at the time frame I want to show you, and I haven't even looked at this one because we didn't start until started a little before 8:30. Took a while to get everything lined up. The market was moving so rapidly, and I later, just told people, hey, we're going to look at 2 o'clock today, p.m. in case the market slows down like it did yesterday. And we did the same thing. We made profit in the morning, but not much. And in the afternoon, I know I did, and I know some traders that did. And we're going to look at the same thing today, but we're going to, I've already traded this and made $380 late in the day in the 10 o'clock time frame. I had told everyone to, hey, go back to sleep or just, take a break and we'll see you at 2. But I kept trading with the 22-2 and made a quick real time $380. Now I was not recording that, so I came back, and this is a replay. I'm not trying to trick anyone. I just I don't even care. But what I want to show you is that there's a potential when you're pressed into these higher time frames. And again, you don't have to trade the many. You might need to, and probably do. It's going to be totally predicated on your trading plan and your ATM settings and your risk reward and account size. You might want to trade 1 micro or 2 micros. That's your call. So you don't have to take huge risk because you got a big stop, and I'm starting with a 30 stop and a 30 target. And often I have to pull that stop to make it compatible with, the pattern in the market. And I also am very aggressive at going to moving the stop to break even. Why do I do that? Because I don't want to give back profit. I'll actually go break even plus more than enough to cover commissions if I get there. Sometimes I pay the piper because of it. Usually I don't, but we'll see how this turns out. Caution is king. Today was tough, and we can see here, I haven't started it yet, but we already are in a very nice trend, and this is the high fib, basically, the high for the day. And we know we're going to be pushing into it, which is often a very good place to do counter trend, but we're only doing trends. We're staying very conservative in the room. So many people have funded accounts, and so many have lost consistently, that our goal is to trade in a manner. We can't call their trades, but we can show you the trades that are there. Trade in a manner that allows for consistency in the market. So what I'm going to do here with our strategies is select retrend dot, which is basically a wick or sticks. Let me make sure I'm still connected here. Okay. And you saw that acceleration on a big bar. So even this time of the morning, you at the hourly mark, you normally get some movement. And sometimes it can be chop. I mean, it can flip one way and flip back and flip the other. I mean, at 9:30, the New York Open, it's almost always an issue. You don't want to be in there at least 5 minutes. And today it was insane. And again, because I'll get grief for this, I'm not trying to tell you that I traded right here, because I didn't. I do a lot. Today we just anticipated. There was no red flag news, but a ton of news. And we've been noticing, like with the NQ, if you got an 8:30 news window, it just runs as soon as the news is out. It can run for an hour or 2 hours, just insane, especially on the smaller chart. All right, we haven't got a wick yet, and we're pushing the fib. And as a rule, we got such a unbelievably strong trend that started back here at 644, 645, that area. All right, we got a stick. So that doesn't mean that this is not going to reverse on us here. We're not in yet. It won't fill until the completion of the bar. I don't want to give money away before I even earn any. So we're in profit. It's pushing hard. Looks like I should have been trading this time of morning, but we want to start moving the stop up to mitigate any potential for hitting a 30-tick stop. But we do like, in general, we've learned the hard way, we do like a 1-to-1 ratio with stop to target, or even better if possible. When you have the smaller time frames, bar size, excuse me, that is difficult to do. And it makes it much more difficult when you have a loss, if you got a 2-to-1 stop to profit target, it makes it difficult. And that doesn't even include, you have to create 2 profitable trades, and you're still not even because the commission's out and you're close. That pullback, this is not atypical of trading. Okay. Now, what did we do here? So that's amazing. We got $150 profit, and we really like that. And honestly, a lot of people would already close down, and there is nothing wrong with it. We're going to look at, we're up in here. This should reverse on us. Trio down. Again, I said we love counter trend trades when we're pushing up against the high fib or the low fib. And we also consider it with the mid fib. And we go over that every day in the room. I just press it hard. So what we teach in our room is, let's say we're trading the 7 o'clock time frame. We if we get a couple of good trades, we're going to go to the the next time frame, and we could go to 7:30. Or the 8. I like to go to the 8. Why? Or just quit. And it's your plan. So I'm not trying to be wishy-washy. It's got to be totally based on your plan. I'm going to pull this down. I don't want to. Honestly, we got enough profit in here. I'm going to put it to break even. And it could bounce off of this. This is the 89 EMA. Okay. That for me is where I like to be every day. $200, $300 per contract. And we're at a spot where, we can call it quits. So what we're going to do here is I'm going to speed this up, go to 8 o'clock, and we're probably going to get another trade here. I tell you what, let's do. Let's just sit here again, since this is not live, and see if we get what we call an ambush, which is a lower high and a re-entry, and get a quick move, maybe down to the 200. And whatever we do, we're going to be very aggressive with the stop. But prudent here, caution is king. We've made our goal. Don't be greedy. Now, this is early in the morning. We got up early. We have more opportunity. We could do multiple things here. We could flip to the micros and do 1 or 2 micros and just trade for experience, because, you're not losing tens of dollars or hundreds of dollars. You're losing dollars. And that's easy to work with. So this could reverse off the 89 and go up, or we could get a setup for what we call a lower high and re-entry into the downtrend. Whatever happens here, I'm not going to really take the high. Everything down here on our what we call the HUD is negative. And I don't have all the indicators from our strategy on, because I don't think I need them right here. I mean, that spiral, if we took a spiral, it would have triggered right here. Much more confidence in the spiral, and it worked out extremely well. But we got in up here, and we had the spike, which is the lower bar, already triggered and got confluence here, and you can see the two together. It's right here. Okay, what do we want to do here? This is a good thing about the strategy. If I select retrend down, which is this, it will take a trade on a sticks, a wick, or if we get a bar that completes up and maybe goes one or two bars, and we come back in and rejoin the trend, that's called a retrend, and that allows us, with that one selection, to trigger on either. And guess what? If it doesn't trigger, no problem. Now we got a retrend down. This might trigger up with trio. We just hit clear. You don't want to leave it on. But let's say you got three things selected because you want to anticipate certain actions, and one occurs, the strategy is cleared without hitting clear. I mean, you can hit clear, but you'll see they disappear. You do want to hit clear if it doesn't feel at all trigger. You don't want to be not anticipating something that you forgot to clear later that might be not in your best interest. All right, we got an ambush or lower high, and this is a little scary. We're going to move this quickly if it gets in our favor. I mean, when I look at the smaller time frame, which I'm not showing because I don't want to, overcomplex it. We're on a swing pivot low. We're bouncing off of it, which I don't like. And we're on the 200 on that time frame. And it's not a small time frame. It's 11-2 Renko. So it's significant. And being greedy sometimes can make you pay the piper. Hopefully we don't. And we got, the market's slowed down. It's making us rethink, oh, I knew I had all this support that this was landing on. How smart was that? And we're straddling the 89 EMA. It's just painfully slow. But we haven't lost yet. So, and these, this setup, which is a lower high, is also very high probability. But nothing that I've ever seen is 100%. So you have to accept that. Okay, come on. I want to start mitigating this stop, but I don't want to pull it down too far. We'll leave it here in case it pops back on us. Now we're on the 200, and we could get some what I call reflux back up off of it. Maybe not. I'm going to pull this down to break even. Okay. Now, this is my thought process, and yours is different, predicated on your plan. There's $450 profit on one contract. I would do two things, either or. One is stop trading, go back to bed, or two is trade micros. But just for explanation, we're going to speed this up so we can watch the market, but we want to go to 8 a.m. and just see what we get. So we're running fast. And I'm going to just speed this forward. Usually when we get 8 to 8 a.m., we want to give it a minute because we get some erratic movement. You know, some chop moves here, up, moves here, down, sideways, back up, back down, just for a few seconds. Okay. We're right here. And we're going to move forward. So this trade, let's see. I'm going to look at this real quick. We got 7 solid bars, so that would have been 14 ticks, and then we would have stopped out. So let's just give this a minute or two. Just to see where we go. And again, we know we got resistance up here at the top, what we call the swing pivot, which I'm not showing here, but I'm looking at it on another chart. But I didn't want to make this so complex that you don't see the prime reason we're doing this. All right. We're at 802. Let's just see what we get here. So we had a chance of breaking even here if we move the stop. I don't want it to be automated with the ATM because I like to move it myself. This was down on the 200 and it didn't work, and you would have been stopped, but you had the 200, and we were just, we took the open here. Now that turned out to be a nice winning trade. We didn't take it. Why? It was too close to the open. I'm thinking we're going to get back up into like we did before, the higher fib, and set us on a trend down. And I'm not going to run this. I want this to be short, just explanatory. But I'm not going to run this into where I took the actual trades, because that was way late, and it took me a while to figure out that the market wasn't going to slow down. And I had to switch everyone in the room to at least advise them of my thought process. Just an anticipation. We're going to go ahead and select our trio down, because things can get, you can get distracted and things can get really fast when they do occur. And we got a sticks, quote, wick. And let's see if this is going to go up and start pushing the high fib again. Maybe reverse. We don't know. But we can look back and see the structure that we hit this high. And it's going to likely give it more resistance again. And I urge you, this is what I urge you. I can't tell you, but I urge you to set a goal, and a conservative goal where you can be very consistent. Because if you're not trading, funded accounts, what you can do is add contracts to your personal account, accomplish the same goal. And what we do and suggest people do is, let's say we're trading $4,000 or better, even yet $5,000 per contract, and that's conservative. We like to not do over 2% risk with our stop, and we mitigate that as quickly as possible with moving that stop. We won't add a contract until we do a double. So we'll add the second contract at 10,000, but it goes quickly when you're compounding. And for traders that have a smaller account, let's say $500 or $700, we'll start with a micro. It lets you get the feel for trading and being consistent. And even then, when you start with a micro, and we ask that you start with realistic account size. In other words, you got a $500 or $700 account. You don't want to start real with one micro, but you're training and trading and simulated and playback. You do 3 minis. I mean, that's just not logical, and it will give you the wrong mindset. You want to think in a different way. Okay, we got filled. We're right on a lot of resistance on every time frame, so I don't know where this is going. It's 8:16, and I don't want to risk a lot of that profit we got. So I'm going to pull this back. So even if it goes against us, honestly, we're there. I'm going to pull that. Wow. Okay. I'm going to cut. This is explanatory. Come to our room. You'll see we adapt and adjust. This was an exceptionally good day. That was $600. Many people go for more than that. We don't normally go for that. I mean, sometimes we do. But, it's $600 with one contract and one account. That's $3,000 per week. And when you add the 52 weeks, that's $156,000. Now, I'm not guaranteeing anything. I'm just throwing out numbers, random numbers. Everything's based on so many factors. Your personal ability and account size and on and on and on. But let's say you did have 5 funded accounts. I mean, and this is just pie in the sky. We're certainly not advocating any of this. We're just telling you the numbers. That's $780,000 in a year, minus commission. And we normally, like if I'm going for $200, I try to cover that with just a little bit extra or an additional trade that I get in, get out quickly. And sometimes that can hurt you. Yes. But I like to clear the $200. I can set an extra tick on the strategy and get it, or tick or two. So I just wanted to demonstrate this because of you guys and gals that tried to trade this morning, you probably got absolutely chewed apart. And this is the way we had adjusted. Now I didn't get $600 gross, but I got 380, and I moved the stop the same thing aggressively. Have a great day. See you tomorrow, or if you're in the room, we'll see you at 2, which is hour and 45 minutes or so, and we'll go from there. Take care.